It's good to see you. Enough damage to upgrade them now? You tell me.
Yeah, thank you for having me. We are not officially upgrading stocks yet, but definitely we're done de-risking, let's put it that way. And we are watching every day for signs to get more aggressive in the equity market. And so not an official upgrade. I think there are really two broad components to a market bottom that we want to see. You want to see depressed sentiment. We got that. All the retail metrics, inverse ETF volume that we look at, vol targeting funds, the things that we model from the institutional side, everything was depressed on the sentiment side. VIX at 45, all those things point to a bottom, but we want to see technical confirmation. Philosophically, you decide in these situations whether you want to be early or late. Philosophically, we are going to be a little late probably. So I think when you look out from here, it's going to be a good buying opportunity, but we haven't pulled that trigger just yet for our clients.
I mean, as long as rates remain hot, the stock market feels like it's going to have a problem. We don't want to get into another situation where we're literally hanging on every move of the bond market to decide whether we've got a bigger problem to worry about.
Yeah, definitely. I would say that's one of the things that's giving me pause here is just like what we've seen out of bonds here has been a little bit disconcerting. There's been some forced selling, of course, rumors that foreign governments are selling some of their treasuries, which I think is one of those nasty potential consequences of the trade war. I mean, it kind of goes back to, do you think that the tariffs that are stated right now, the ostensibly in place tariffs, are going to stay in place? Our view from the beginning of this is that the policy proposed on April 2nd, and even the policy as it's stated right now, is kind of too absurd and destructive to stay in place. And so that which cannot be maintained will not be maintained. So I look at it as a negotiating tool more than anything. And I think at the end of the day, you'll see rates settle down and reflect more of the fundamentals of the economy versus some of the stuff we've seen over the last week.
But if that's the case, at what point does the market anticipate that or start to move into that? I think most people expect deals, that we would expect there to be some kind of deal, I suppose, to get that number on China down from 145%. So when does the market start to suss that out?
Well, I think they started yesterday, to be honest, and I think we even saw it today. So the market was kind of in free fall, and then Trump had his press conference. And when did we turn around and rally 100 points is when he said, hey, I want to make a deal with China. I think what the market is seeing is just what I said, like, OK, we can all have economists come on TV and talk about how destructive tariffs are. We all know that if we run the tariffs in the current state that they're in, we're going to disrupt global supply chains and have a recession. We know that. But when the market is starting to, as you said, suss out, is that we're not going to be here. This is going to be a negotiation. And so each one of these deals, as I see it, is going to be a potential catalyst for the market to move higher as we go forward. So, I want to get my technical confirmation and everything like that. But as it's set up right now, I just don't think the negative feedback loop that's hitting the White House is starting to have its impact. That's what the market's seeing. Yeah, we're giving back some of the gain from yesterday, but we were up. This was tied for the third largest gain in modern history on the market. So I'm not reading too much into just like a little bit of a sell-off today.
I mean, I know it's crazy that we're used to these types of moves where you would describe this as a little bit of a sell-off with the S&P 500 down 4%. You know where I'm getting at? Like, okay, welcome to the new world of a volatile stock market. Are you surprised that we didn't get follow through from yesterday?
Not really. No, I mean, what I did is I went back and looked at all the days where the markets rallied 7% in one day. And so, because I've heard a lot of people say, hey, this is not bull market behavior. You don't get rallies like that in a bull market. And that's not really true. Like I said, there have been 8 of these days where you're up 7% in one trading session. 4 of those days have been around the bottoms, major bottoms of bear markets. So start of a big rally. And then 4 of those cases have been in ongoing bear markets. So 3 times in 2008, 1 time in early March 2020, where there were bear market rallies that faded. And so what you see in those cases is that within the next, if it's a bear market still, within the next week, you will break lower below the old lows. and fade off this rally. And so that number to watch is 49.82 in the current market. So giving back and consolidating, that's fine and normal, and it doesn't take us out of a potential bottoming behavior. But if we break down below 49.82, then the bear market still has more room to go.